It's Cashflow Cart, and today we have a very exciting video, guys. We're going to go over the right way to invest $1,000 in dividend growth stocks. Okay, let's do it. A quick update. So I did take, one Monday off from recording for the channel, and I did address it in the prior video. I was not just doing anything. I was working on a lot of thumbnails. I was working on brainstorming, and then I was also working on like short form content, which, unfortunately, short form content is part of the game. That is not really my favorite thing to make, and I don't make any stuff that's like just for the sake of short form content. I usually do I always do. I just clip my actual videos. I post those as YouTube shorts. I'm trying to work on the TikTok game, but it's kind of on the back burner. But let's get into it, guys. So I went home to dog sit for my parents for 3 days. I lived at their house. It was pretty relaxing. I just worked out and I worked on the channel, watched some Netflix, and I'm back now. I'm back at my house and I'm feeling very energetic and excited to move forward. I do want to go over a few things that have just kind of, hit me since I last filmed. So, obviously we've been talking about short-term goals, guys. I want to get the portfolio value to $70,000. All right. I do want to get to that $100,000 mark. I think that would be, I don't want to say unrealistic, but that's a pretty lofty goal to try and get to that 100K by year end. So I'm not really sure the exact time frame of that goal, but we'll get there. In the meanwhile, I did make this thumbnail, November 70,000 dividends. So I guess that means by November. It's currently October 15th. By the November review, we will have to hit that 70K mark. So we're probably going to figure that out. But that's exciting stuff. We're going to keep trying to build the portfolio, and I'm going to document the journey along the way. Guys, while I was home, I did go to the high school I went to. I went to their sectional, soccer championship, and that was cool. I haven't seen them obviously play in a long time. I was just home and looking for something to do on a Saturday night. So very crazy stuff. And someone I knew, an adult that, was a dad of one of my friends, he was like, what are you up to? Are you doing the YouTube thing? Are you trying to support yourself from that? I do want to clarify, guys, I do not make any money from this channel. I like to document the journey, and I think it's been really fun and really rewarding to kind of do this YouTube documentation thing on the side. However, I've been investing, and I've really been doing this dividend growth investing game for a long, long time, much before YouTube. This is not something I'm doing to try to earn money. It's just kind of, I don't really know why. It's just really fun, entertaining, and exciting for me. So I do want to address that. I don't make any money from YouTube. I make money from my job and my dividend investments. So, all right. One other thing I did think of, and I do want to talk about diversification, guys. And I will go over kind of what sparked that in my head. So I think especially newer dividend investors are kind of prone to being in this mindset of, I need to diversify, I need to have all the dividend kings in my portfolio, and then I need 3 ETFs I need my sector allocation to break down to be, exactly this. And I'm speaking here from what I believe and what I've learned through my journey. I think the whole diversification, kind of mindset is a little played out. And what sparked kind of my thoughts on this was I was talking to someone I work with who's, 2-3 years older than me. I'm not going to get into like exact details, but I mean, he is like my superior. And he's like, okay, so you're doing a lot of investing in stocks. Like, tell me about it. Kind of give me a quick, I guess, spark notes on what you do. And I'm just kind of thinking, what's the best way to sum this up? I tell him I have, this many holdings. I try to look for undervaluation and dividend growth companies, and then I build out a position. Kind of the same thing I preach on this channel, but in, a 2 to 3 minute, espresso shot. And, he kind of comes back and he says, oh, I could never do that. That's way too risky. That's I only really do ETFs, whatever. And he's kind of, I can see that he's in kind of that mindset of like diversification is what you need. And I'm kind of thinking, and I say it, I'm like, what's so different about having, one job? Most people probably have one job. What's different about that? They don't have a diverse portfolio of jobs. They're not doing a bunch of different things all the time to earn money. And if you think about it that way, I mean, is having one job risky? If you're doing your best, you're doing your due diligence, I guess that is risky, but a lot of people, have the risk tolerance for that, but then they don't have the risk tolerance to buy, individual stocks, to build out positions in individual stocks. And I think that's a great comparison. One other thing I did write down that I do want to say is anyone who's really ever succeeded in terms of, being wealthy, financial, success, whatever, they didn't really do it by doing 500 different things, okay? If you ask someone, if you meet someone who's in a good position in life, financially speaking, they're going to be able to tell you, okay, this is what I did. And there was other stuff on the side. There was maybe some luck involved, some side investments, whatever. But, I was just thinking there's not 500 things they have to do. The guy who took my wisdom teeth out, for example, I mean, he takes out wisdom teeth, okay? And he drives a Ferrari. He doesn't do 500 different things. And that's kind of the approach I kind of want to bring to investing, really understanding the investments you are making and not really being afraid to, build out a position and build conviction in a stock and then obviously learn from it. And, that's kind of my 2 cents on that, guys. Did not want to get on too much of a tangent, but we are, like I said in this video, we're going to talk about the right way to invest $1,000 and kind of, again, my take. This is not licensed financial advice. Like this, as always, this is me documenting kind of my journey, me building my portfolio. Okay, so we're at, $68,457 in the portfolio. Today, we are going to invest just over $1,100. And I had $324 cash in the account from dividends. As you guys know, I don't use any sort of drip dividend reinvestment plan. So I had the $324. I went ahead and deposited $805. And we're going to get to that roughly $1,100 mark in today's video. We will look at how that affects, kind of my overall and monthly averages. So right now, the portfolio income as of the next 12 months is $2,650 estimated. That breaks down to a monthly average of almost 221. It's 220.88. Okay, so that's kind of what the portfolio stands right now in terms of passive income. In the past, I have kind of not hated, but I have kind of criticized the Schwab investment income tab. I do still really miss the TD Ameritrade income estimator. But anyway, I did like this feature. If I click on 2024, 2023, like I can see, okay, in 2023, my monthly average was $149. 2024, the monthly average is $198. And then as of the next 12 months, it's $221. So I guess that's kind of cool. You can kind of visualize your dividend snowball, if you will. Okay, so again, another little random thought, guys. So the right way to invest $1,000, and for me, I'm sure you can guess after these multiple tangents, you've probably put together that I'm going to preach, not an ETF, not some diversified portfolio where you're looking at sector allocation, trying to have some perfect thing. For me, that $1,000 investment is going to be no different than just continuing to build your portfolio, and whatever stock you've identified as undervalued, as a good opportunity, and as I can't talk, as a growing dividend payer, you're going to put that chunk of money into that stock. And I have talked about, I'm aggressively building kind of my Hershey position right now. We're at $8,380. I've said, each video you guys see Hershey kind of moving up in the ranks. Was with the medium guys. Now it's kind of in between the medium and the large positions. We will go ahead and take that to, almost 10,000 today. We'll get it to 10,000 soon. Probably in October, we'll get it to 10,000. So we will go ahead and buy Hershey, and I'm not going to go over, my entire bull case on Hershey, but Hershey is the stock that I identify as, an undervalued dividend payer and grower, guys. Their dividend growth track record is 14 years right now. Their 5-year growth rate is just over that 12.5% mark. Take this for what it is. Okay, it's trailing data and it's a calculation. It is not something that you can just project into the future forever. But I still do like to see, because it does tell, kind of a story of how interested and dedicated the company is to rewarding shareholders in terms of dividends. And then, we have identified Hershey's dividend as being a sustainable one. Their cash flow payout ratio on a trailing basis is 43.5%. They have plenty of room to continue to grow that dividend, as well as still have money left over for, improving the business, acquisitions, developing new products. They have the cash to do all of that. I like that a lot. The yield, Hershey's dividend yield right now is almost 3%. I would like to lock in some shares above 3%, but I'm not going to pinch pennies about that. What else? Valuation. I talk about this, undervalued dividend stocks. The one I like to use as a dividend investor, again, it's not going to be price. It's not going to be price to earnings. It's not going to be price to sales. For me, my favorite one is price to cash flow on a forward basis, kind of comparing it back to where Hershey has stood over the past 5 years. So right now their price to cash flow ratio is 14.69. Okay, their 5-year average is just above 24. Okay, and the story that tells is, Hershey trading right now in comparison to itself is at a almost 39% discount. Okay, does that make sense? That is kind of the metric I use, at least the fundamental metric I like to use in terms of valuation, as well as, you guys can say what you want about technical analysis, but I mean, for what it's worth, I am a technical analysis fan, so I'm kind of watching Hershey in this consolidation channel it's in right now, hoping to build out my position, get to that 10K plus mark in Hershey, and then once I've kind of set my position, in a perfect world, Hershey kind of reverses and helps push my portfolio towards that $100,000 mark. Okay, that's kind of what I envision if it's a perfect world. Okay, I know we went through that fast, but like I said, today was kind of more of a big picture video. We're talking about how to invest $1,000 to change your life in dividend stocks. So we will go ahead and make that buy on Hershey. Like I said, we are investing, roughly $1,100, maybe a touch more. And that is going to get us 6 shares of Hershey stock. We're going to go ahead and do that. That will take me to a long position in Hershey of 51 shares. Currently, the investment income is $2,650, like I said. Let's see how that changes here. You do not have enough. Give me 1 second. I don't know if I'm on the wrong account. Okay. Try that again. Nice. Okay, 51 shares of Hershey. Let's go ahead and see how that affects things. I do remember in a previous video, I was like, yeah, I want to take Hershey to 45, maybe 50 shares, maybe. And now we're at 51 shares of Hershey, and I'm still hungry. I still have a sweet tooth. So we're going to continue building Hershey. And, that just kind of goes to show, guys, that this is not something you always have planned out. This is a game of taking what the market gives you and also kind of seeing what your risk tolerance is for different positions. We've gone over it with T-Row a lot, but, that's another video for another day. Okay, so $2,650 estimated annual income. What did the 6 shares of Hershey get us? Now we're at $2,681. So it looks like that 6 share purchase increased our estimated annual income by $31 and change. It took our monthly average up, obviously 31 divided by 12. And, that's kind of what happens, guys. Hopefully we will see Hershey continue to grow their dividend for a long, long time into the future. I'm really excited to be a part of this one. But we'll just have to keep an eye on it. And, that's what this is all about, guys. Finding opportunities, taking advantage of them, and then, learning from them down the road so we're better prepared for the next one, guys. Again, I'm Cashflow Cart. Thank you so much for joining me today. It's been awesome to film. Like I said, I'm back. We're going to keep going. I will try not to take many Mondays off, but, just know if I do take a Monday off, it's to brainstorm things of that nature, guys. Please subscribe. Please hit that like button, and I will catch you next Monday, guys. Let's build wealth.